Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services. And after last week's choppy session, there has been some amount of recovery, and I think that clear and present danger in terms of the inflationary pressures and interest rates moving up, along with, of course, energy crisis in US and Europe. I think one has to possibly accept that there are going to be more shocks that will come in from US and Europe as far as the growth trajectory is concerned. Uh, as far as our markets are concerned, I think since we are a part of the global economy and emerging market, one of the leading emerging markets, to mind you, I think we will possibly have to follow what happens over there. But the important thing that I want to draw your attention to is even when we had the statement coming out from Fed Chief Mr. Powell at the Jackson Hole meet, we corrected and recovered. Even last week, because of the fear of interest rates rising in the US because of the inflationary pressures and slowing growth, there was a case that was built up that at the Fed meet, there is going to be aggressive moves by the Fed chief to move the rates higher. Uh, don't know how much quantum, but what the gossip in the market is anywhere between 0.75 to 1% is the trajectory wherein the Fed will move the interest rates up on the higher side. And that was one of the reasons why not only our markets, but the markets across the globe, including emerging markets, have corrected. But even this time, like we saw at the Jackson Hole meet and the statement, and after that, and even now, uh, you know, other emerging markets are still struggling to find some amount of stability. But I think we have recovered quite smartly, at least this morning. And as I speak to you this morning, just let me get you familiarized with some of the levels on the Sensex Nifty and Bank Nifty, energy basket and currency. So Sensex is up at 59,200, up about 370 points. Nifty is at about 17,645, up 113 points. Nifty Bank, which is the strongest, 41,115, up 345 odd points. On the currency basket, rupee is exhibiting some strength against the dollar. Levels are 79.66. And on the energy front, a little bit of up move marginally. $91.90 per barrel is Brent, and $85.50 per barrel is where Brent is there, and NYMEX is at about 91.90. So, like we've been mentioning that, whatever happens into Indian markets because of global news flows, I think that's a positive trigger because India is relatively better placed. We are in a much more better situation. We are comfortable as far as interest rates are concerned. We are better off as far as inflation numbers are concerned. And I think global GDP growth rate will possibly stabilize as we go forward from here on. Not to forget, friends, the advanced tax numbers and the tax collection numbers that were out last week on Friday and over the weekend, they show some impressive sign. Uh, there has been uptick anywhere between 20 to 25%, and in some cases, the tax collection has gone up by 30%. So this speaks quite strong in terms of the tax collection by the government, and the government treasury is becoming much healthier. And of course, on the GST front, for the last 2 3 months, we have been maintaining 1,40,000 crore collection every month on the GST front. So all these augurs well. The only problem is that because of certain news flows from the global front, we may react to it, but we stabilize even faster than the rest of the world. So I think one should possibly look at buying opportunities. One particular sector in focus is defense. We spoke about BL, I think about maybe more than 3 weeks back when the recommendation was made, and I mentioned the kind of opportunity. And today, the defense forces have requested the private and government suppliers to ramp up their capacities and supply whatever they required within a year's time. I think this augurs extremely well. So you have names like BEL, You have names like Mazgaon Docks, you have names like Cochin Shipyard, Hindustan Aeronautics, Bharat Dynamics, uh, BEL included, of course. I think this particular sector will stay in focus for a pretty long period of time. My only request is that if you really want to earn some decent return, then stay invested for a longer period of time instead of looking at short to medium term kind of gains. I think long term, all the stocks associated with defense, whether private or public, especially government owned, will exhibit tremendous amount of strength.